Welcome to Momentum Monday. Today is August 31st, 2022. Howard, how come you're dressed in red? Are you still bearish?
No, it's July 31st, buddy.
Oh yeah, July 31st.
That's
Sorry.
a month.
I'm a month ahead, just like the market, you know.
And you're 30, you're allowed to be a month ahead. I'm 56. You can't steal a month from me. I noticed this.
Yeah, I wish I was 30, but that's a different topic. So let's talk about the markets. Lately, I've seen significant improvement in price action, and even before the Fed, the last FOMC meeting on Wednesday, we kind of were seeing companies coming up with missing estimates, earnings and revenue estimates, guiding down and not really selling off. I mean, I'll give you a few examples, like iSurgical. I mean, they gapped down on their earnings because they missed, and that gap was quickly closed. And there are quite a few like this. So we're seeing positive reaction to relatively bad earnings report, which is usually bullish, which is usually how bottoms are formed. Like, I don't know if this will be the ultimate bottom, but this change in sentiment is definitely very noticeable. And we saw it in Microsoft and Google. The earnings report were not incredible either, but they rallied on them. So we're seeing companies that beat estimates like ENPH, which is a solar company, just gapping up, breaking out to new 52-week highs and just following through. Obviously, there is a different reason here. But at least we're starting to see that improvement in price action where some companies are breaking out on after earnings, which we didn't really see in the past 2 quarters. In the past 2 quarters, we will see like a 3-4% gap up that a few days later would be completely faded. This season, we're seeing the opposite, like companies that miss estimates, they just gap down a little bit and they quickly recover. Which to me it's a change in sentiment. It could be like short term, but definitely a change compared to the last few months. The other big thing that happened on Wednesday is that the Federal Reserve refused to give guidance for future interest rates increases, which the market read that maybe the Fed is going to become a lot less aggressive in the future now that the interest rates are a lot higher than they were 6 months ago, 8 months ago. And I guess the market and the Fed are betting that maybe what they've done so far will be enough for inflation. If it's going to be enough, we don't know.
Yeah. Well, let me flip you through what I see because you can help me. So let's go to the S&P first. No matter what, I've read a lot about breadth thrust from a lot of the people I trust on the technical side, that there was like a big breadth thrust. I just like saying that word, breadth thrust. It's like a porn. So you had a huge breadth thrust. The problem I see, and I'll pull up some data and I'll share my screen and share a few charts, is none of this means anything for me as a trend guy until we get back above the 200 days. So all this is happening below the 200 day. Okay, so let's remember what started us talking about being negative and careful versus, everybody being excited last week because stocks stopped going down on bad news, which they did. But let's be honest, Google, if we pull back up Google, I mean, it's still just bumping along, no real, you know what I mean? Like, yeah. So is TikTok taking their business? Is Apple taking their business? Like everybody's, I'm not convinced we're even close to a bottom. But I don't want to be negative. So go back to S and then go back to S&P.
Okay. So granted, as you mentioned, all the indices are below their declining 200 days. So what is currently happening is considered a bear market rally still. And obviously,
it could be vicious. Like we could get weeks of this. You could get the QQQs back near all-time highs, and then we'll have to see where the divergences are. But right now, ARK is not bouncing, right? It's a tiny relative bounce relative.
I mean, ARK is such an unusual
I understand, but that's still like the hope stocks, right? And you've had a pretty big rally in small caps, and you've had a pretty big rally, like 15% in the S&P. And so those should be up 50-60%. Instead, a lot of her companies are blowing up. Roku imploded.
Teladoc
imploded. You know what I mean? Coinbase. So you still have this hopium kind of nature, and so I worry about that. The second thing that, and if we pull up the Qs, I still say, you know, I'm not seeing the bounces. I think this is a lot of Apple and Microsoft. We look at Apple here, you know, this is still a lot of Apple pulling this up. It's still the large caps moving the Qs, not the crap, not the ARK hope stocks, right? So there's still very terrible price action. And then this breadth thrust, I think, kind of confirms that energy and materials are still in. Look at 10, which is the so this is still kind of an energy band. It's a little bit of tech, but it's still like based on like people thinking about growth within energy. So the XLE started bouncing. I don't know which index you started, which you cover on this, but like Exxon bounced right where it needed to. And so this is, you know, you might have seen your last chance for a year or two to buy these things on that last pullback. Again, I'm not an energy guy, but like people were getting excited that they were maybe rolling over. And so, you know, we've got this rally. Rates kind of have started falling. You've got the dollar finally starting to stop going up, at least, right? It's still in a massive uptrend. And so this is all natural. And the backdrop is, you know, we all kind of knew numbers would be bad, and I guess they just weren't as bad. Okay. But at the same time, for these tech companies, they have to grow, and for the stocks to really start moving. And we're a long way from seeing that because they're just starting to announce cuts, right? Apple just announced that they may stop hiring. Shopify just announced that they cut 10% of the workforce. It's going to take 2-3 quarters for these companies to work through that, get through the productivity changes, maybe drop another 20% of their workforce. You know, is 10% just enough? So again, a lot of these founders have not seen a bear market. Tim Cook has, but like Shopify hasn't seen a real bear market. It grew from 2010 through 2020 with, you know, COVID only helped them. So they haven't seen something like this, right? So I worry about that. And let me share my screen. Let me show you a few things that I kind of pulled together.
Okay, I'll stop sharing. Now you try to share.
Share. Thanks, buddy. How do I share mine? Do you see mine now?
Yes.
All right. Let's get off the porn. All right. So here's that breadth thrust. Can you see that?
Yeah, we can see it.
So this is from a good friend of mine, Jonathan Krinsky. I'm not supposed to share this, their private research, but so this breadth thrust is important for technical people, right? Like a lot of institutions follow this, and generally breadth thrust, especially when you're above the 200-day moving average, can be really significant signals of a bottom. But what Krinsky is saying is that when these happen below a bear market, I mean, below the 200-day. So you're going to hear a lot about this week and a breathless discussions about this breadth thrust, but be careful because the numbers, and he's gone back and looked at all this stuff. Okay, next thing I wanted to share was, you can see there's a couple things at play here. So proceeds from IPOs of technology companies have amounted to, so we're down 90% this year. 95%, we're down 90%. No, wait a minute, more.
Yeah, about 90, yeah.
Over 90% in terms of new offerings, right? Yeah. Not even counting SPAC. Okay, so you're getting no lift in the, what I said all of 2021, the supply would kill this bull market, right? And that's what it did. Now we're seeing at least supply dry up, but even with supply drying up, the markets aren't getting any lift, right? And that's because, boom, VC fundraising, so there's so much money sloshing around. So even though this was like the worst year of tech, people still chasing VC fundraising, right? So people still, you know, are living in the past bull market. And you know, a lot of that money that's coming into VC is chasing stuff that hasn't been proven, like Web3. So you still have a lot of misallocated capital. So I worry about that, even though that's good that there's capital out there, Ivan. It's to be proven whether it's in the right hands. What was the other thing I was going to look at? The other thing that's interesting, this goes to the bear market rally continuing, is the consensus bulls are a disaster. So even though we got this rally bullish, there's just very few people that believe, and count me in that corner. What Helene's saying is the bears that just are perma bears are just going to form fit this to 2008. And, you know, the question is this going to be a true long crisis? And that's tough to bet on either way. But if you're not betting on an 08 crisis, these have generally been good moments to own stocks. So be careful what you buy. Try and focus on the leaders. I'll put the screen back to you, Ivan, so we can finish us off.
Okay.
I'll stop sharing. Okay, we're back to you.
Yeah, you stop sharing. I'll share mine.
So where are we seeing? So energy still, and now maybe solar.
I mean, it's not only that.
The industry, like solar is just so tiny that it's hard for me to get excited about it.
Look, so right now I'm not worried that the ARK stocks are not rallying.
Nor am I. They're shit. Like, I agree.
Yeah, most of them. But it's completely normal if you're like 90% cash, super underinvested. If you want to put 5 or 10% of your money to work, it's completely normal to put them to work in Google and Microsoft and Apple and Tesla. This is natural. This is how the risk cycle really goes. You know, you start with the bigger companies, and then you become, you know, more, your risk affinity increases, and then you start chasing more, you know, riskier companies. So what is happening currently? So while the Fed is raising interest rates, supposedly shrinking its balance sheets, which there's no proof of that really yet, our fiscal spending is increasing. Like, they're talking about 2 new big bills, the semiconductor bills, about build in America, produce chips in America and innovate in America, which is definitely giving a boost to the entire sector. I mean, yes, it's still below its 200-day moving average, but we're starting to see some decent sized moves, especially in smaller semis, which is positive. You know, that's another sector that is getting, you know, some new money. So and other than that, obviously, is clean energy that you already mentioned. That's the other new climate bill that there is a chance that it might pass. Definitely giving a big boost. I think on Wednesday or Thursday, there were so many solar companies that went up more than 10% on 3 to 5 times their average volume. This is some serious accumulation. And yes, it's a tiny sector, but you have to start from somewhere. It's a good thing that we're not really talking only about 2 or 3 stocks near the 52-week highs. There are more showing up. And as I said, I still believe this is a bear market rally. I wouldn't be surprised if the indices have at some point in the next 2-3 months another leg down, especially ahead of the midterm elections. Stocks are typically weak ahead of the midterms. But while the indices are potentially making new lows, I think we'll see more stocks kind of building bases, not really confirming that new lows. So this is why I'm saying that correlations are starting to decline, and it's time to really put more effort into stock picking, because some stocks are starting to show.
No. I mean, I got to clean. This is a time where you got to clean up. If your stocks aren't bouncing with the market, you're in trouble. So e-commerce isn't bouncing. Retail is a dog. I don't know, XRT.
Yeah. I mean, obviously,
these are not, you know, like, we have lost some, you know, a lot of that is Walmart.
And look at this. I mean, they had like the worst report in their history, and the gap was closed 3 days later.
I know it's a gap, but look at the weekly and monthly, like, they're going to have to start actually performing. And now you got 4 years of overhead, or 2.5 years of overhead to clear. So it's going to take a while to chew through this. I hope I'm wrong. Like, again, I use a disclosure. I hope I'm wrong, but I'm in the process of, like, finally starting to look at the all-time high list, hoping to see some growth names. Solar, I've never made a dime in solar. Oh, so what's this?
We're just an industrial company, so we're starting to see some, like for example, this one, HVAC play, like ventilation, air conditioning. As you know, most of Europe is under extreme heat conditions, and not only Europe but the world. So this is like probably a long-term trend, and there are other places in this field. So they're like smaller industry groups that are starting to show their relative strength. So that's why I said it is the time to really do some stock picking, because correlations are starting to fall.
Yeah.
Which is good.
Well, I think it'll be an interesting way. It's getting the summer doldrums. I don't want to work to August. People are taking Europe's going to take their last vacations. Americans get to the beach in August before back to school. But there's just so many So I think like you said, we could rally 20% more and still be in a bear market. Yeah. I think what's hiding a little bit of this bear market is Exxon and Apple, the large caps, that are really holding this up from a market cap perspective. So I don't know. It's very confusing because I haven't seen a bear market where we had this. I personally haven't seen a bear market. 2008 was the last big bear market, and the world looked a lot different, right? Google was just getting started. Apple didn't even have the App Store yet. So we live in a world where the indexes are so different, market cap weighted, than the last bear market, where financials took down the bear market. So really, you're not going to see a collapse until Apple implodes. And maybe with the M1 chip and just the complete dominance of Apple, I own it, so I don't think I have much alpha there. But like, they continue to shock and awe people. So I think, like you said, stock picking is going to matter. I'm definitely trying to reposition a few ideas because e-commerce isn't bouncing and retail is not bouncing at all. So I'm a little nervous there. So you've got to be realistic about what you own and kind of use these divergences and relative strength to kind of reposition your portfolio, which I'm trying to do. But I'm still kind of leaning on the bearish side. Where are you? Mostly cash still? Nothing changed for you this week?
Mostly cash, but I'm definitely getting a little bit more aggressive because I see more opportunities and definitely getting more active. Because the market.
If you told me that Apple's at basically all-time highs with China shut, Russia shut, U.S. dollar where it is, and interest rates going from mortgage rates at 5%, I don't think I could have predicted that Apple would still be at all-time high.
I mean,
and oil at $100.
Yeah.
So so I think there's a lot of. Apple's running a lot of cover for everybody. And I still think, like, if we look at China, I mean, oh my goodness, like, people are like, that is truly closed off to us. Like, if I look at Alibaba, like, where's that going? Zero? I mean, how is Baba?
Yeah, Chinese companies are having issues right now.
No, I mean, you can't invest in China. I've said that for 6-7 months. Like, it's uninvestable. But you kind of hope, but they just continue to throw in the towel and shut themselves off to the world. So what that says to me too is, even if we bottom and have growth, like we have half of the world shut, customer base shut off to people. So I still think we get that valuation compression, and I'm trying to figure out what gets valuations growing again, and having all this money in still freely flowing into VC just means valuations are going to stay high, and I don't love that. That's the kind of stuff that bothers me. I'd like to see more panic. But anyways, I hope everybody has a great week. Ivan, thanks for doing this as always.
All right, Howard. See you next week.
See you, everybody.